Stocks are up today. A government shutdown was averted in the US, but our guest says tariff fears are hanging over the market and investor sentiment is fairly bleak. Are there opportunities? Let's bring in Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. Thanks very much for joining us, Jonathan. You feel, is Mr. Trump in the driving seat as far as the markets are concerned with his trade war?
Yeah, I mean, we've got a lot going on with this market, Andrew. Obviously, today, the headline coming out of the averted government shutdown is why it's seeing all green on our screens today. So we'll take what we can get for now. But overall, as we continue to have these trade wars and these conversations and these negotiations going back and forth, any headline that comes out of Washington with the word tariff in it has clearly put pressure on our markets over the last 3 weeks. And I think as this continues to unfold, I'm hoping that we're getting more to a point of these conversations are getting parties back at the table to get to some resolution. But until we start to see that tipping point, until we start to see some headlines that are showing or indicating that, we're going to continue to have some pressure here on top of our markets. So sentiment overall is really watching these headlines and waiting for the next news feed to come out, which has made somewhat negative feelings as to what's happening in our markets here. The pullback that we're seeing and that we've seen over the last few weeks, we could debate whether that's warranted or not, right? We had a nice run up in the market pre-election. We had a run up in the market post-election and then after the inauguration. So probably a little bit of inflation in our market pricing at some point. So it's trying to find its way to come back to some sort of normalcy. The pendulum has probably swung a little too far at this point. I think hopefully with the headlines today, and if we continue to get some headlines of U.S. Canada, U.S. Mexico, U.S. Ukraine, some of these more beneficial headlines, we should start seeing this market to form a base at these levels.
You think there's a case to be made that tech has sold off too much?
Again, the pendulum has swung really far in this area, especially with tech. When we get these downward moves in the market, you get some profit taking coming off the table, and if you're looking at the tech sector, clearly has had a fantastic run over the last 2 years. So we're starting to see that rotation out of tech, or we've seen that rotation out of tech, and going into some of the more defensive areas, the consumer cyclicals, real estate, some of these areas we've seen that shift back and forth. But if you look at some of these stocks in the tech sector, some of the Mag 7, you clearly have an opportunity to get these at a discount. It's very difficult to predict the bottom and the top of the markets, but when you see a stock has a downward pressure on it and it's 10, 15, 20% cheaper than it was a month ago, it's probably a good idea to start picking away, because overall, when you look at the long run of the market, this is going to be just a blip in the overall chart. We had the same type of trading and pattern at the end of July, beginning of August, when we had a sell-off in the market. Not to go too far back, but in 2020, that sell-off in the market. A lot of these patterns are the same, and what we've seen overall is once the dust settles, things start to pan out, we get a little bit more clarity and transparency to how tariffs are going to play out, the market will rebound from this.
Amazon is down about 10%. You argue it's a consumer cyclical. I guess people buy staples there as well, but depends how much you shop there. Are you seeing value in a name like that?
At this point, yes. As you're getting these at a discount, take Amazon, for example. It's had a pretty wide range in it and has had a very significant run up in the market as everything else did run up. So we're seeing at this point, as it's trading below 200, that might be an opportunity to start to pick away and get involved. Again, it's going to be difficult to pick the bottom here, and the progress or the lack of progress that we're seeing in tariffs, once we start to see a little bit of a glimmer of hope, the door is open, getting back to the table, getting to some negotiation point where everyone feels comfortable, the market's going to absorb that and take that into consideration. Then we'll start to move higher. I do think that we do have to kind of hold our course as we're waiting for the Fed next week, right? We continue to talk about interest rates and the pattern in which the Fed hopefully will start reducing interest rates. Current geopolitical issues and concerns that are out there, our trade wars that are out there. Fed's going to take this all into consideration. I think heading into this new year and this new administration. I don't think the Fed had all these things on their calendar to take into their equation. So all these activities might force the Fed to cut rates sooner than what they planned. Estimates going into this year were rate cuts towards the end of the year. That might start to move up towards September and June.
Thank you very much. Always great hearing from you, Jonathan. Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners.